This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend. I'm Ross Greenwood. It's great to have your company today. Coming up on the program, Australia's lack of competitiveness hangs heavy over our economy right now, with warnings our growth rate inevitably must be subdued because of high government spending, a lack of productivity and mounting debt. But what to do about this? David Pearl is the former number 2 at our federal treasury and says woke policies and a lack of willingness to challenge the status quo could lead our economy to a dangerous place unless things start to change.
There is a global competition for mobile capital, and to the extent that decisions are made in Australia which see capital go offshore.
A key area for our lack of competitiveness is energy prices, which are driving manufacturers, foundries and smelters to the wall as we speak. It might all be different if the government gets off its tails and approves gas fields and gas pipelines. It did so this week at Woodside and the North West Shelf extension, but others now need help, like the Beetaloo Basin in the Northern Territory.
We and some of our neighbours in the basin are only months away from delivering gas into the Northern Territory market.
And this week, the government announced a unique $1.7 billion deal to develop and make drone submarines in Australia. The company behind it is run by a 32-year-old US tech entrepreneur who sold a virtual reality headset company to Facebook owner Meta for $2 billion US when he was just 21 years old.
It's an incredibly wonderful privilege to be awarded the $1.7 billion program of record to produce Go Sharks at scale.
So all that and plenty more coming up on today's program. But look, I want to start with Australia's competitiveness, or rather I should say lack of competitiveness. It should be a matter of national alarm, but somehow the government blithely wanders on without any apparent sense of urgency. That lack of competitiveness was highlighted by the President of the Business Council of Australia at that organisation's annual dinner this week. The guest speaker at that event, the Prime Minister, Anthony Albanese. Senior ministers, including the Treasurer, Jim Chalmers, were also in attendance. They could not have missed this message.
Every CEO in this room, all else being equal, would rather invest $1 in Australia than invest $1 overseas. Every CEO in this room, all else being equal, would rather create a job in Australia than create a job overseas. But things aren't always equal. And right now, Australia is on the wrong side of the competitiveness equation, and we are losing investment to our overseas competitors. The focus post-roundtable must be on making Australia more competitive, to drive business investment and to raise living standards. That must be the test.
Now, there's a few things to remember here. Just before the election, S&P Global Ratings warned that Australia's coveted AAA credit rating is at risk. The Reserve Bank has indicated that because of a lack of productivity improvement, our long-term average economic growth rate could be closer to 2.25% rather than its long-term average around 3%. So that makes it harder to afford all of the social reforms that the Labor government has introduced and which, of course, its voters treasure. To show you this is not just us making up this stuff, just listen to this package of our leading chief executives in Australia laying it on the line about Australia's lack of competitiveness and just how many now are actively seeking opportunity overseas rather than Australia. This comes from interviews we've conducted in the past month.
The last $30 billion US in material investments we've made have been elsewhere. And it's a shame. I mean, it's really a lost opportunity.
Could have you made those investments in Australia?
Absolutely. So the Browse opportunity, very significant gas field. It wouldn't have used all $30 billion. It would have used a chunk of it. Very significant gas resource. The environmental applications to get that approved were also submitted in 2018. So, 7 years in, and we still don't have a line of sight.
When manufacturing capacity goes, it's very unlikely that it would ever return. We saw that with the automotive industry. What you're now seeing in the US on the back of the current administration's tariff position is we have companies from all over the world investing in the US because it is competitive, but also because it's a very large market, so you have the benefit of scale. So that is a real watch out for Australia. If we lose manufacturing capacity here, it won't come back.
And about 45% of our normalised EBITDA actually comes from the overseas market. So we've been able to diversify not only our revenue pool, but our profit pool across multiple markets. So we're not wholly reliant on the Australian market to deliver our business performance, but we have significant expansion plans in Singapore, Vietnam, China, Malaysia, and a few other markets across Asia where our product range is really resonating with those consumers.
Well, of course, every opportunity is an opportunity that we wish to pursue, but there is competition for capital, and that's both within BHP, but also between enterprises. And so the opportunity at Olympic Dam, or Copper South Australia as we call that basin, is competing for capital with other opportunities in the BHP portfolio. And even if they weren't inside the BHP portfolio, the project has to be economic. It has to stand up against other copper supply opportunities around the world.
We do excellent R&D here in Australia, and we get good value from it, but we are still a higher cost place than other parts of the world. And the second part is that the incentives to do R&D for large companies in Australia are 30% below peer countries.
So that goes straight back to the government?
Yeah, well, yes, that's about government policy and government settings. And this is all about other countries being very motivated to attract the sorts of work that we and other big companies do, and putting the settings in place.
Well, look, it is disappointing when I look at a lot of our resources customers. So we provide a lot of critical ingredients to the big Australian resource companies, and it's, I must admit, I feel there's a regret that they seem to be investing more offshore than in Australia. But I can understand that when you look at the comparative tax systems and the different timetable it takes to get approvals. In Wesfarmers, at least, we're deeply committed to Australia. It is hard to navigate some of the investment complexities. It is also frustrating where some of our tax structures create a competitive disadvantage of being based in Australia versus being based internationally. But look, I think we are very keen to control the controllables, face into the opportunities we have. And as you said earlier, I think some of these opportunities with technology and generative AI hopefully will give us the ability to actually drive productivity within our own control rather than necessarily wait around for things to get better.
We've had a very specific strategy to invest in Australia, and we believe in the Australian economy. We believe in the unique position we have here.
But is it tougher?
I think it is tougher, to be honest, yes, no question. But on a relative context, I'm not sure that means it's a worse place to invest. I think arguably it's still the best place to deploy capital from our perspective. From the size of our business and the opportunity, we still see a lot of opportunities to grow in Australia, and that dynamic around a tougher regulatory environment or tougher economic environment is the same environment for everyone else. So if we can apply the same discipline in how we operate and find businesses that have the potential to where we can provide that disciplined execution and unlock value, we can create value for our shareholders, and that is a key focus for us.
And well, one person in a unique position to understand Australia's competitiveness and the importance of our economic growth rate is David Pearl, the former Assistant Secretary of Australia's Treasury. And I spoke with him earlier and asked him what the impact of the loss of competitiveness means to our economy going forward.
It has a negative effect on the Australian economy. There is a global competition for mobile capital, and to the extent that decisions are made in Australia which see capital go offshore, that's a negative. I think the fact that we've lost competitiveness as an economy is undeniable. I think it comes down to a whole series of things, and I'm happy, Ross, to talk to you in detail about some of the policy prescriptions we might want to think about.
Okay, so the one thing I would observe is that once upon a time, Australia was protected by the so-called tyranny of distance. It was our disadvantage, but it was also our advantage. But because capital is so mobile now, because creating a multinational business is much easier from a place such as Australia, think Canva, think Atlassian, think so many more of our other big multinational companies, that means that we've got to be more conscious than ever of the movement of capital in and out of the country.
No, that's absolutely right. Even in the past, Ross, as you rightly said, we were protected by the tyranny of distance. Many of the top Australian export earners, from wool in the 19th century through to minerals in the 20th century, benefited from the fact that they were internationally competitive. we didn't become a major commodity exporter simply because we had the resources under the ground or on our paddocks. It was because we were world leaders in efficient production.
So that being the case, what does government need to do to make Australia more competitive? Those policies that you were talking about earlier.
Well, the way I think about it, Ross, and the way that we used to think about it in Treasury, and I must admit today's Treasury is a long way from what it was in the past, but working for Ted Evans and Ken Henry before he became an environmental campaigner, we used to discuss it in Treasury. You've got a choice of two economic and political models, Ross. You can adopt the Western European model, which requires that governments direct resources to political ends, massive welfare states that apply to everybody regardless of their income, and high tax burdens. And the results of that are very clear. We're seeing that in Germany, France and Britain, and Australia is following in that track. That might allow you to equalise incomes, but it will be at a lower level, and it slows growth, and it undermines your ability to attract talented labour and mobile capital. The other model is the one that the Australians embraced in the 80s and 90s, and that was bipartisan, and it won many elections. And that was based on not a universal welfare state, but means-tested welfare. It was based on health and education services that were provided by private sector and independent operators who responded to market signals. And it required lower tax burdens, lower income tax burdens and corporate tax burdens. And it's no accident that we had both the Howard government and the Hawke-Keating government signing up to that alternative model, Ross. And it was remarkably consistent. Both cut the top marginal rate, both cut corporate rates, both deregulated industrial relations, and both kept a lid on not only spending and deficits, but the size of government.
So that also led to a higher annual economic growth rate. Our GDP growth rate was much higher, in the 3% for much of that time it averaged. Now it seems the Reserve Bank, and indeed I speak with many economists who say the long-term run rate is probably more likely 2.25%. The problem is if you've got government that has spent a lot of money on social welfare reforms, you need economic growth to pay for that. And if your long-term run rate is much less, it makes it harder not to have debt and deficits as far as the eye can see.
Well, that's right. And you can't tax your way to prosperity. You can't tax your way to higher growth. And one of the most disappointing things is that the modern Treasury and the modern Productivity Commission have lost sight of that. The Productivity Commission, as you and your listeners know, Ross, put out a paper on corporate tax before Jim Chalmers' recent roundtable, which argued that we should increase tax burdens, corporate tax burdens, on the most successful large Australian companies because they supposedly earn rents. Now, what rents mean in economic speak is you can tax their profits up to 100% without affecting their investment. That's just ideological. Whenever it's been tried, it's been a disaster. But that's what mainstream economic agencies are calling for now. Similarly with the welfare state. If you provide universal welfare to the entire population, regardless of income or need, you have to levy a crushingly heavy tax burden on the community. Growth necessarily slows. And you get caught in a trap, Ross. This is what we're seeing in England and France. You've got left-of-centre governments in both countries that thought they could tax their way to fiscal sustainability. But what happened was that growth was adversely affected, revenues declined, and deficits and debt got worse. So you get caught in a spiral, and that's exactly the one that the Australian government has got us into. And I must say the opposition aren't really offering an alternative either.
So this is going back to the competitiveness and the flow of capital outside of Australia. And that is that it's about the tax burden, it's about the industrial relations laws that make business easier or harder to accomplish. And then it goes to energy prices, with energy prices in America in particular, about a third of those here in Australia, which makes it more desirable to be there in a bigger nation that is likely to be growing faster than here in Australia.
No, absolutely, Ross. And I want to talk a little bit about net zero. And I know that it's not politically correct to do so, but I just want to remind your listeners that if you were an Australian Treasury official in the 80s or 90s, or working in the Productivity Commission, or a professional economist, you would recognise that cutting carbon emissions necessarily reduces growth and living standards. That was the starting point for Australian officials at the Kyoto Protocol, and I was a junior official at the OECD there, Ross, and I witnessed it, where European countries said we had to cut to net zero, and Australia and other dynamic non-European countries, this is in the early 90s, argued that we had to be allowed to increase our emissions because we had young populations, big immigration programs, and heavily fossil fuel dependent economies. So the depressing thing, Ross, is that this was an economic truism that all Australian public servants, all advisors to governments recognised only 30 years ago, that you can't have your cake and eat it too. Sure, you can cut emissions as much as you want, but you're going to cut growth and you're going to lose the competition for investment, as you just referred to with the US. And the fact that we as a political community cannot even acknowledge basic trade-offs means that we can't have a rational policy approach. And unfortunately, we've retreated into slogans which deny any trade-off. And that's the reason countries lose their economic bearings when governments claim that you can have zero emissions, high growth, prosperity, equality of incomes. You can't. Mature communities have to understand that you have to make decisions. Now, climate change is a global issue, Ross, and if 60% of the world's GDP aren't signing up to emissions cuts, and if the US has walked away from Paris, and I guarantee you the US is not going to join again, there's no environmental, let alone economic rationale. And it's depressing to me, Ross, that as a mature community we should have debates about this, but we have a government that's completely blinded by its ideology, and we have an opposition which is afraid to even question the economics of it.
Okay, so then last question for you. Is it too late for Australia from a competitive point of view? Already you've got Standard & Poor's is suggesting that Australia is on the last rung before losing its AAA credit rating, which is much coveted. You've got a situation where you and I can acknowledge that Australia has lost its competitive edge that it once would have had. Is it too late for Australia to avoid a future economic downturn as a result of all of these things we've talked about?
Well, it's fascinating, Ross, because I'm sure you and many of your viewers have been watching closely what's been happening in London and Paris. And there you've got governments that are caught in debt traps. Britain and France are losing the confidence of global investors. The spreads on their bonds, their 10-year bonds, are higher than Greece's. Can you believe that? Mm-hmm. And you've got governments that have tried again and again to tax their way to fiscal sustainability. So we're on that track. Now, the AAA credit rating is an interesting one because in Treasury, we always thought that was never worth the paper it was written on because it takes on faith our public debt projections, our public budget projections. Now, let's unpack those. They basically say that there's no fiscal problem in Australia because they make a number of unrealistic assumptions. One, that government spending will grow at a fraction of what it has over the past 5 and 10 years. So in other words, we'll have an NDIS that's within budget. We know that's not true. Two, that the Australian community, already taxed to the gills, are going to sign up to another decade of bracket creep. Three, we need no increase in defence. And four, there'll be no international crisis. The risk of global stagflation with Donald Trump declaring war on the Fed and the price of gold, which is a hedge against stagflation at a historic high, is extraordinarily high. So if you unpack all of those unrealistic assumptions, Ross, we could find ourselves in fiscal difficulties very, very quickly. So the AAA rating, to some extent, notwithstanding the warnings of the agencies, is not worth the paper it's written on.
I'll tell you what, it is so good to get your insights today, and it really is a dose of reality, not only for government, but for even our own Treasury as well. David Pearl, many thanks for your time.
Thank you, Ross.
Well, this week, Defence Minister Richard Marles and Defence Industry Minister Pat Conroy announced the government will spend $1.7 billion over 5 years to acquire a fleet of Australian-made drone submarines known as Ghost Sharks.
This is the highest tech capability in the world. It exemplifies the fact that Australia is leading the world in terms of autonomous underwater military capabilities. And Ghost Shark is capable of engaging in intelligence, surveillance, reconnaissance and strike.
Ghost sharks are the brainchild of the US defence tech startup Anduril. Anduril was created by 32-year-old American entrepreneur Palmer Luckey. That's him right there. He's best known for inventing Oculus, virtual reality headsets. He then sold that business to the Facebook owner Meta for $2 billion US. He was 21 years old at the time. The amazing part of the deal announced this week is that Anduril has collaborated closely with the Australian Navy for 3 years to build these drone subs right here in Australia. Ingrid Willage got Anduril's Australian Chief Executive, David Goodridge, to explain just how that deal works.
It's an incredibly wonderful privilege to be awarded the $1.7 billion program of record to produce ghost sharks at scale. This follows a 3-year co-development process that concluded in June, where we produced 3 ghost sharks with a production-ready variant at the end of that program. And you may have been tracking that we delivered those ghost sharks ahead of schedule and on budget. So now we're moving to where the real work starts, which is to produce many, many ghost sharks for the Royal Australian Navy.
All right, can you talk us through the ghost shark for those who don't know what it is? Just tell us all about it.
Sure. Ghost Shark is an extra-large autonomous undersea vehicle. It is militarised because we have a commercial variant called the Dive XL as well as the Ghost Shark. The Ghost Shark is capable of doing a range of things. Firstly, ISR missions, gathering intelligence, surveillance and reconnaissance. And importantly, it also has a strike capability. And this makes Ghost Shark an incredible addition to the crewed capabilities that the Royal Australian Navy has in its Collins-class submarines and future AUKUS submarines.
It's really interesting because, you co-developed and co-funded the Ghost Shark with the Navy, so it was this shared risk between you and the Australian Navy. Is this a common practice? I mean, just talk us through how important that collaboration was to the success of it.
Very much not common. I would say we're probably the only contract of its kind and hopefully the first of its kind. We'd like to see many more of these types of contracts where the private sector leans in and uses its own capital to help create capability that is of relevance to the warfighter. So where this takes us to is an alignment of interest, and the success of the Ghost Shark has not come by accident. It has truly been a partnership between the Royal Australian Navy, the Defence Science and Technology Group, the Advanced Strategic Capability Accelerator and Anduril in terms of working together as if we were one organisation, and that has delivered an extraordinary result.
It's really interesting because you mentioned timeline, and one of the big pluses, I guess, to this particular deal is that it was such a short time frame compared to what you would expect for a mammoth deal like this. Can you just explain to us how critical that is, and how do you manage to sort of be ahead of budget, ahead of sort of timeline with the technology and capabilities that are changing all the time?
Slight correction, we were under budget and ahead of schedule. Yeah. And that's really important because with the alignment of interests, we are not incentivised via a cost-plus contract to make the time extend and the costs increase. Cost-plus contracts, for the benefit of the viewers, are that the contractor gets paid a percentage profit on top of cost. Obviously, the incentive there is to increase the cost so that your profit as a percentage also increases. We only work on firm fixed price, so hence we take the risk. In terms of shared risk, yes, it was a 50-50 co-funded deal. We think of that as a great deal for the taxpayer because the taxpayer was only paying half of the cost of the program. Anduril was paying the other half, but we had a firm fixed price for 3 Ghost Sharks in 3 years. In fact, we produced 4 Ghost Sharks. The 4th Ghost Shark was produced by Anduril on its own balance sheet to accelerate the testing and evaluation of this capability in the United States.
What's the plan when it comes to manufacturing at scale? Because you've mentioned that's a big part of it. And when do you make the decision to export as well?
Well, the manufacturing at scale has started. We've invested $60 million in a state-of-the-art factory here in Sydney, and we will be delivering the first Ghost Shark to the Royal Australian Navy in January of next year. Yes, you heard that right. That's 3 months away from now. And that's extraordinary. In terms of the timeline, you're right. This is not a common timeline for a defence capability. Defence capabilities are much more longer term, generally speaking, because they adopt a very defence-specific approach, and that is to detail reams and reams of specifications before you start producing. We had a very small contract with a very few number of criteria, which we immediately started to engineer, and then we accelerated through. The first prototype delivery was 12 months ahead of schedule.
Can I ask you as well, manufacturing here in Australia, that's a big deal. And I'm interested in this because, how do you make this decision? Do we have enough skilled labour to make it happen to the scale that you wish? And I guess how important is it that Australia has this sovereign capability?
We don't do enough manufacturing of defence capabilities in Australia, full stop. We started Anduril Australia in 2022 with the mission for creating or to build a capability that could be manufactured in Australia. So Ghost Shark is engineered in Australia, tested and evaluated in Australia. It will be produced in Australia by Australians for the Royal Australian Navy. We believe there is a massive export market for Ghost Shark and subject to government approval, which we believe will be entertained favourably. We will be exporting Ghost Shark to our allies and partners in the region.
When I look at your company, it's really interesting, and I know you've mentioned this before. We hear of disruptors to media, disruptors to retail. You're basically a disruptor to the defence industry. Can you elaborate on that?
I'd like to call it a positive disruptor to the defence industry. And positive in the sense of we're not seeking to disrupt for the sake of disruption. We're seeking to disrupt because the global geopolitical situation has changed. We see it, unfortunately, in the media all too regularly in the Ukraine and the Middle East, that drone technology and autonomous systems are becoming more and more common. They are continuously updating and upgrading from a threat perspective, and what we need to do is to be able to get ahead of that threat change, to be able to respond and to defeat those capabilities. So from an Australian perspective, if we get into a conflict, we just absolutely have to not have our supply chains disrupted like they were in COVID, because a global war, will make COVID look like a picnic. So having this sovereign capability in Australia, you can't have everything produced in Australia. That's just not possible with respect to a small country like Australia. But things like a Ghost Shark, where we have great expertise in the undersea domain, and we can produce it with amazing technical skills that we have in this country, we should absolutely do that. And
Australia is, surrounded by sea, so it helps to have capabilities in that area.
We are a nation girt by sea, exactly, as our Chief of Navy has said on many occasions.
AI and technology, interesting, plays a really big part in war, which, you don't really think about, well, I don't really think about information being such a big part of winning a conflict or in defence, or sort of giving you the leg up in defence. Talk us through how information plays a role in this and how you play a role with information.
Well, Anduril's often thought of because of our amazing products, but really what we are is a software company, and everything Anduril does is autonomous. Everything Anduril does is based upon our open architecture operating system that's called Lattice. And Lattice fuses an unlimited number and amount of data into a common operating picture that gets presented to the commander or to the warfighter with a range of AI-generated options. The human being or the commander then selects which option, and the AI system, the Lattice system, implements that option. So it's absolutely fundamentally critical in the modern battle space for AI to be included. Now, we talk about trusted AI. Our adversaries don't really care about the trusted AI component, but we do, and we should. And so the conversation around trusted AI needs to continue. We're participating in that conversation because AI is going to be absolutely crucial to winning the next war.
And what sort of risk-taking is involved? How do you sort of decide where to put your R&D?
We pick opportunities where we believe the warfighter can benefit, and we invest our own shareholders' capital in developing solutions that then we present to the warfighters. The warfighters then use our products, use our capabilities, and give us feedback. That feedback is turned into a second iteration, and because it's software driven, that iteration happens really, really fast. So we do changes to the software in sometimes hours and days, as opposed to previously it used to take weeks and months. Yeah. And that is the pace of change that has to be adopted in the modern warfighting scene.
Can you just give us an idea of somewhat US defence companies versus Australian defence companies? Because US defence companies, they have a real sort of stronghold in the market, a lot of respect there. Is there a difference coming at it from an Australian perspective, do you find?
I don't think so. I think we have very strong alliances with the United States. They're a critical security partner. We have a lot of societal and cultural connections with the United States. But Andrew Australia was set up to meet the needs of the Australian Defence Force. Those needs aren't uncommon with the United States Department of Defence and the United States Defence agencies either.
David, thank you so much for joining us on the show today.
It's been a great pleasure. Thank you so much.
And just a little addition to that story, Anduril also has a contract for a 3-year trial with the RAAF to deliver air and ground defence capabilities at RAAF base Darwin. Well, coming up after the break, we take you to one area that Australia really truly needs to improve its competitiveness: energy prices. And the answer is right beneath our feet if only government would say yes more often and more quickly. Thanks for being with us here on Business Weekend. Well, on Friday, after almost 7 years, the federal government signed off and finally approved the extension of the North West Shelf project. This will extend the life of the giant gas field from 2030 out to 2070, bringing prosperity and taxes to Australia and energy security to our neighbours, including Japan and Korea. The fact these gas projects take such a long time to be approved says everything about Australia's declining competitiveness. To be positive, the Environment Minister Murray Watt did make the final pragmatic decision with strong urging from the WA Labor Premier Roger Cook.
Following the consideration of rigorous scientific advice, I have today given final environmental approval for the North West Shelf project extension. This approval is subject to 48 strict conditions designed to protect 60,000-year-old rock art at Murujuga in the Pilbara region.
Now, the North West Shelf is not the only key gas project that needs wholehearted government support. The Beetaloo Basin in the Northern Territory has the potential to alleviate the critical gas shortages in the eastern states, plus to replace lost gas production as the Bass Strait reserves deplete. Alex Underwood is Chief Executive of Beetaloo Energy, one of the key gas companies with resources in that area, and joins me now. Alex, many thanks for your time. Can I first get a reaction to the government making this decision, this final decision on extending the life of the North West Shelf?
Well, it's fantastic news for Western Australia and the country, really. We desperately need more gas supply both into the domestic market and to support our trading partners in Asia, and so it's a delight to see it happen.
OK, so then your own projects and those other companies that are in the Beetaloo Basin, they can not only provide gas to Darwin, to the Northern Territory, which doesn't have coal-fired power stations, but on top of that, it also can potentially alleviate the gas shortages on the East Coast. The question is there going to be enough gas coming on stream soon enough to be able to alleviate those shortages?
Well, the answer in short is yes. We and some of our neighbours in the basin are only months away from delivering gas into the Northern Territory market. There is some connectivity into Australia's east coast, albeit limited. We think we're quite close to supply both into the NT market and Eastern Australia.
Have you suffered the same sort of delays that Woodside suffered in getting those environmental approvals into the North West Shelf extension?
Not necessarily. It's still been a fairly long journey for us to get into initial production.
How long?
So I've been doing this for about 7 years, and we started off with exploration, and it has taken some time to get our approvals, but we're knocking on the door of production now.
So what sort of approvals have taken the longest time to get across the line to get to this production?
So we operate under an extremely rigorous Northern Territory-based regulatory system, and under that system we require approvals from traditional owners, local pastoralists and the government. Those processes are extensive and require us to really gain the trust and respect of all of those key stakeholder groups. And, it's taken a couple of years, but, we've got those approvals now and we're pushing forward.
Talk to me about the pipelines. There's APA Group, which is Australia's giant pipeline operator. What's required to try and get the gas from your fields to the east coast of Australia, along with to the Northern Territory?
Yeah, so pipelines in Australia suffer one of the issues of having a vast country in size with a very small population. The Beetaloo is an enormous gas resource. It contains enough gas to power Australia for the next couple of 100 years, but it's not located very close to the major demand centres of New South Wales and Victoria, where there are significant shortages that are getting worse by the day. As I mentioned, there's a small pipeline connecting into the East Coast, but to really help resolve the East Coast's problems, we need bigger pipelines into those gas-hungry markets. APA have been, very supportive of the Beetaloo, and they have enunciated plans to build a very large pipeline into the East Coast. What they need to see is the proving up of the resources at the upstream level, which is what we and our neighbours such as Tamboran have been very focused on doing. And then they need the customers at the other end, who I can assure you are very keen to see this gas delivered.
I'm certain about that. Just one thing, would it be easy to build those gas pipelines straight to the East Coast from Beetaloo, or to go down further into, say, the Cooper Basin, where there's already existing infrastructure?
Yeah, so APA's plans are to get into Mount Isa, where they then have a continuous network of pipelines into Brisbane, Sydney and Melbourne. There have also been plans enunciated to go down into Moomba, which does get you more directly down into Sydney and Melbourne.
So is there a better way from your perspective as a gas producer as to how that gas should move? Because quite clearly, the more efficiently you can get your gas to the East Coast market, the more you're likely to sell.
Yeah, so that is somewhat a question for our customers as to where the gas needs to go. What I would say is that in the past, we've had a problem in this country where we have built pipelines for the size of the demand and supply on day one of construction of that pipe. I think what we need to start doing in this country to future-proof our pipeline networks is to oversize those pipelines, potentially through support of government vehicles such as the Northern Australian Infrastructure Facility. That will allow demand to grow over time into those existing pipelines, and will also help drive down tariffs to use the pipelines, which ultimately will benefit the consumers.
And then the other side of this, from your point of view as a gas producer, do you have contracts for that gas, or are you more likely to try and exploit spot markets to actually sell it to the open market and then take whatever prices is sitting there on that time?
So our focus for the first few years is on supporting the Northern Territory market. This gas belongs to the people of the Northern Territory. They are suffering shortages themselves, and so it's only right and fair that we support the local market first.
So in other words, you would support gas reservations. That's a part and parcel of your operations in operating in the Northern Territory.
We've made it very clear for a long time that we believe that the Northern Territory should come first, then Australia's East Coast, and ultimately LNG export. However, it has to be done in a way that ensures that it can be delivered affordably and efficiently into the East Coast market.
If you were to export, if there was sufficient gas there that you had contracts you could actually fulfil overseas, would that gas, you imagine, go out of Darwin, or would it go out of Gladstone?
Darwin is closer to the Beetaloo Basin than Gladstone. Ultimately, again, that is a question for the LNG exporters who own those terminals. I foresee that there's an opportunity for both. The coal seam methane fields of Queensland have been an incredible economic blessing to Queensland and Australia, and they've underwritten 6 LNG trains out of Gladstone. But those fields aren't going to last forever, and so they will need backfill, and putting gas into that existing infrastructure is quite capital efficient, whether to Darwin or Gladstone or both.
Okay, so you are an operator in Beetaloo. There is gas there. Tamboran has found that gas as well. Do you find the fact that there is an East Coast gas shortage just a bit nuts?
I certainly do. I mean, Australia is incredibly blessed to have some of the world's best energy resources, and yet here we are suffering shortages. What I can say is we as a company are very committed to helping to resolve those shortages, and I think the Beetaloo has an incredibly important role to play.
Okay, just a final very quick one. Does the federal government have to do anything for you to be able to support and provide that gas to the East Coast market and to the Northern Territory?
So right now we are regulated by the Northern Territory government. There will be a point in the future where we reach a sufficient level of scale that federal approvals will be required, and that's as these operations scale up.
I'll tell you what, Alex Underwood, great to have you on the program today, and many thanks for your time.
Thank you.
Well, coming up after the break, what happens if you think your business lacks competitiveness, but you can't easily take that business overseas? Well, that's when you start to explore artificial intelligence to cut your costs. It's great to have your company here on Business Weekend. Now, for many global businesses, the answer to a lack of competitiveness in Australia is pretty simple. They just move their capital, along with jobs, tax, and opportunity, overseas to countries that get better, more reliable returns. But what if you run or work for a business that's based here in Australia that can't move? It might seem there's nowhere to run. Well, to overcome rising costs, more small and medium-sized businesses are increasing their use of automation and artificial intelligence to stay competitive. Philip Stempion spoke with two businesses leveraging Oracle's NetSuite platform to grow their business. And Oracle and NetSuite, of course, sponsors of Business Weekend.
This monitor looks like any other ordinary desktop monitor, the ones office workers around the world use every day. But this monitor is different. It's made by Espresso Displays, a local startup, and used by artists, executives, doctors, and even elite sport coaches. Espresso Displays are the world's thinnest portable monitors. They require no charging and have over 1 billion colours. Espresso Displays started like so many other businesses. 4 mates with an idea raised $500,000 on Kickstarter to build the first generation of their portable high-end monitors. But immediately they faced a massive economic challenge from COVID, as co-founder Gary Calderola explains.
So we had to not only navigate starting a business, we had to navigate working through a pandemic, factories shutting down, freight shutting down. But pushing through that gave us the resilience and the perseverance to get out there and make sure that we delivered that product for our customers.
That period of lockdown allowed the team to hone their product. As the world opened up, Espresso sought expansion overseas.
We found that this product was something that people did want, and it took us to that next level, and we kept pushing and hiring a team and growing globally. So now we're in pretty much every country globally.
Another business that expanded locally is Keyser. It uses strength training to help patients reduce pain by building muscle. Since opening its first clinic in 2006, Keyser has grown to 31 clinics around Australia, with around 800 employees. Oddly, for a company that helps relieve pain, Keyser had its own growing pains.
Back in the early days, we really were managing the business on a series of Excel spreadsheets, and everything was fairly labour intensive and manual in nature. Just prior to the changeover to NetSuite, we were running around 27 different individual accounting files. So trying to pull consolidated reporting together was really challenging, and it could take us hours.
Seemingly endless spreadsheets and documents is an experience that many startup businesses have to endure.
To start with, we were on a spreadsheet. So, and you can imagine running a spreadsheet company gets very difficult very fast. So we had to look towards getting a system which would be the central source of truth that could connect to all of our other systems.
Espresso Displays now is beyond the spreadsheet stage, as it uses different technology to aid its overseas expansion. The truth is, unlike the past, it is easier for Australian businesses to seek global opportunities.
Companies are going global faster than ever, not just they have global supply chains, they have global employees, and yet they're still, just kind of getting their feet wet and running their business. So trying to learn everything you need to learn and do everything you need to do to be able to scale your company globally at an earlier stage than ever before, huge challenge.
Oracle's Evan Goldberg knows the startup story well. He co-founded NetSuite more than 25 years ago in a small office above a hair salon. Now it's part of a global organization that works with more than 43,000 customers in 219 countries. Now he's turning his sights on artificial intelligence.
AI can just help you do everything faster, get better insights faster, automation, help you eliminate a lot of the manual processes and really focus on the things that are going to truly grow your business. And it's accessible to everybody. It really can be one of these, technology often has been sort of made it easier for smaller companies to keep up with the bigger guys, and I think that AI is just another example of that.
Keita has used AI and the NetSuite platform to bring its 31 clinics into one central system. The result is the team has access to real-time data and it's able to make data-driven decisions in real time.
I think that AI is really going to fundamentally change the way that we work on a day-to-day basis. The AI tools built into NetSuite planning and budgeting are already giving us that foundation so that we can start to do the predictive analysis and forecasting with the data already there. So I think AI is really going to just enhance the way that we work and just make our lives that little bit easier in giving us the predictive forecasting already.
Espresso Displays has used the technology to compete with larger international companies such as Lenovo and Acer. Its aim is to be more nimble and to deliver products faster while also having more time to connect with customers.
We're quite excited about AI because AI, I believe, is an enhancer and an accelerator. So it's helping the team get stuff done a lot faster with a lot less resource. And so with the tools in NetSuite, we cannot wait to start to use them.
AI isn't just a tool to help nurture and grow businesses. It can be also used to solve complex problems such as trading across multiple countries with multiple currencies while adhering to local regulations. That's what business leaders tell the local boss of Oracle NetSuite, Scott Wiltshire.
So now's the time to focus on productivity and efficiency, as well as embedding great controls across your business to drive growth in a profitable way. But it's more than just cost controls. It's about providing your employees with the tools they need to do more with less and to drive more value for your customers as well as your businesses.
Investors until now have focused on the picks and shovels of the AI gold rush, investing in chip makers including Nvidia and data centers such as NextDC. Entrepreneurs are right now turning their minds to the application of AI and how to leverage it to create the next big startup. The truth is, there is no reason why more global multinational breakthrough businesses should not be based in Australia.
We are at that inflection point. With AI technologies rapidly changing the landscape of businesses and really being a supercharge for productivity, now's the time for businesses to embrace technologies like NetSuite and the AI capabilities embedded within, because if you're not leading here, you risk being left behind.
So that's it for the program this Sunday. Up next, all the latest news right here on Sky News. Business Weekend returns next Sunday, but of course you can keep up to date with all the latest business news with our daily program Business Now, 4:30 p.m. Eastern Time, and via our website skynews.com.au. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.